Hey guys, what's going on? This is Kyle at ProjectionHub, and today I'm going to be talking about how to write a business plan for an equipment rental business. Now, equipment rental can mean a lot of different things. That can be construction equipment, that could be dumpsters, that could be recreational equipment, that could be kayaks, that could be trailers, that could be a whole lot of things. So we're going to try to keep it a little general and talk about just equipment rental in general. Now, of course, as I go through an example business plan, I will, be using a fictitious example that, we'll pick a lane on an industry, but I think it's pretty replicable for any of those types of industries I was mentioning. And I did say my name is Kyle, but what I didn't tell you is that I spent about 7 years as an SBA lender, as a loan officer. And so in my capacity in that role, I worked with startups and business owners to review their business plans, put together their applications, review their projections, and basically guide them through the SBA loan application process. And so during my time there, I got the chance to review hundreds, if not thousands, of business plans and take hundreds of different businesses all the way through to the approval process. So I did that for 7 years with the SBA. And in the last few years, I've gotten to work with ProjectionHub. And ProjectionHub as a whole, we've helped more than 50,000 different small businesses and startups create financial projections for their loan applications, their pitch decks, their business plans, you name it. And so using all of that experience in that context, that's what I'm going to be using today to kind of taking you through how to write a business plan for an equipment rental business. And the main takeaway from today's video is I want to show you the 5 key points or the key areas that I think will basically take your business plan from like good to great. So, I'm going to go through those, show real examples, a real business plan or a real fake business plan. And I'll show you exactly what those 5 key points are, and we'll kind of go through the whole structure. So if at any point you like this video, give it a thumbs up. That really helps us as a fellow small business. If you have questions at any point, leave a comment down below in the video. We're very responsive there. You can also contact us directly at support@projectionhub.com if you've got questions about your business plan or your projections, or if you're trying to get a startup loan, like an SBA loan, and you have questions about where to start and what lender should you talk to, we've got tons of free resources and ways we can help you in that way too. So don't hesitate to reach out. So without further ado, let's go ahead and jump into how to write a business plan for an equipment rental business. All right, so here we've got our equipment rental business plan. And I don't think I mentioned this in the introduction, but I will mention it now. This is a free business plan template. So you can grab your own copy of this down in the description below. No strings attached. You'll get exactly what you see here. Because again, this is just going to be a template. It's an example that I think can be really helpful for you because it provides you kind of a structure. You don't have to start looking at a blank page. So you have a thing that's organized into different structures and different sections, and you know where to write your own information. And then as we go through, I'll kind of give you pointers here on, how to take it from like, a general template level quality business plan to a really good business plan, and different ways if you need help with that our team could assist you, or some of the ways we could assist you. But again, this is a free business plan template. All the advice I'm going to give you today is going to be free, or at least free options for that. And so, grab this, follow through with me, and we'll go ahead and get started here. So first thing I should mention is, why do you need a business plan? And most generally, it's because someone told you you need a business plan. So especially if you're a startup, this is probably gonna be most suited to startups. If you're gonna need some funding, your lender's gonna need or request a business plan, right? Because other than your personal information, your personal financial information, your creditworthiness and that kind of stuff, the business plan and the projections, which we'll talk about later in the video, are the only thing that they really have to go off of, right? That is, they don't have actuals, they don't have historical performance. So they're going to be basing that off of your plan and how likely and realistic does your business plan seem. So if by the end of the business plan, you are starting to get them to say like, well, yeah, this seems very attainable and the steps they're going to take seem attainable, that's where you want to get to, right? So if you're too generic, if you're not specific enough, or if you're way out in left field, like those are the types of things we want to avoid. And we're going to talk about that a little bit as we go into this. So mainly you need a business plan because someone told you to, or you're just trying to get ahead of the curve and you want to get all your thoughts down on paper. That's a good option too. So we're going to start going through this, and I'm not going to read every word of the business plan to you, but we are going to go through every section, and I'll point out those 5 key points. So it'll be very obvious, especially even if you go grab your own copy of this, where those 5 key points are. We've got them kind of, I don't want to skip too far ahead, but you can see we've got these key points very obviously in it. And so we're going to go through a little bit, and then when I get down there, I'll take some more time, talk about the key points, show you some examples to make sure that those really soak in. Okay, so first thing off here, let's just take a look at the table of contents and point out some things about this. First thing I'll mention is that the business plan isn't terribly long. Now, this is an example use case. It's kind of a general fictitious, business plan. And so it's okay for business plans to be longer than that. You'll even see in some of these sections, it kind of has some pointers in here, like a little bit of training wheels, which are taking up a little bit of space, but some of the sections you're going to want to write more than that in your own business plan. But in general, it's a common misconception that your business plan needs to be super long. I think the easiest way to say it is it just needs to be as long as it needs to be for your case. So don't try to shortcut it, but don't try to restrain yourself too much. So you don't want to have to, don't write for the sake of writing or just put in fluff because you want to make it feel longer. But make sure you're thinking about stuff in enough detail that it flows well, and there's some meat to it in there. So the risk of having a really long business plan, if your business plan's 50 pages, 60 pages, 100 pages, you're spreading out a lot of important information over a lot of different pages. And I can promise you, coming from a former lender myself, your lender's not going to read all of that. They're going to miss important details because they don't have all day to read a business plan. And they might read your business plan once. They'll refer to specific sections a couple of times, and they'll look at your financial projections a lot. So that's a thing to keep in mind, is we want to keep it shorter, right? So they can get through it all in a more detail, and you get the point. The second thing I'll point out is the projections are almost half the business plan in this example use case. Now, again, your business plan will probably end up being a little bit longer than what you see here, but that still stands. Your financial projections are going to be probably the most important part of your business plan. And we'll talk about that when we get to that point in the video, but that's something to keep in mind. A lot of people don't think about the role the projections are going to play. Maybe they just have a few numbers in their head, but again, your lender, assuming you're a startup, they're having to make a decision off of nothing that exists yet. And so the more reality we can paint in front of them using our projections and our business plan, the more likely we are to have a shot at getting approved for the funding. Okay, so first up in our first section is going to be the executive summary. And I want you to think about the executive summary as kind of like a cover letter to like that you put with a resume for a job application. So your cover letter is not going to make or break what you get, if you get the job or not, but it is going to provide, it's the chance to provide the first impression. It's the high level details about who you are, in this case about who your business is or what your business is going to be. And so that's what we're going to do in the executive summary. Now in this one, you can see we've got an overview of the company, so just a description of what the company is or will do, where it's located. So you're going to do that in just a few sentences. And again, and these are going to be kind of like previews of larger sections later on in the business plan. Okay, so you can keep it short here because you can talk about more later. This isn't your one chance to explain the business, so we want to keep it on the short side because your executive summary should really be about a page long. So we got a little overview here, and we've got objectives or goals. One thing that I'll point out, and again, this is just because this is a generalized fictitious example, so it's going to be lacking details, but wherever possible, you should make sure it is measurable, specific. And so like this short term, right? It says the short term goal is to make sure ProEquip Rentals is a leading equipment rental provider in Indianapolis. So I'm located in Indianapolis. That's where this example is taking place. That's not specific enough for my preference. I would rather it be some sort of probably a performance goal or financial goal. So maybe we would like to break even in 18 months, or we'd like to reach X amount in sales, or X amount number of customers served. Like it should be some sort of specific milestone that actually is indicative of success, like it's actually working. Having those measurable goals kind of helps, and I'll say this a few times in this video, it kind of like sets the scene. It paints a picture. It provides context to the reader, to the lender. And doing that in the executive summary is important because now they can start to, when they read through the whole business plan, they've got the right frame of reference. They are, they have a grasp of like how big the business might be, how much money you might need, how much money you might make, right? But if you withhold that information till later in the business plan, and then they finally unlock that, it kind of reframes everything. So you want to give them that introduction sooner rather than later. And the goals is one way to do that. So making it measurable in the short term, making sure it's attainable, making sure that goal actually would make a difference in what you consider to be success for the business. And then long-term example, we say expand to 2 additional locations in nearby cities within the next 5 years. That's a little bit more specific, but if truly your goal is going to be to have additional physical locations, I think you should try to have a city picked out, and you should try to have the year in which you would want to do that picked out, because that will take place in your projections. So if that's actually something you're serious about and that is in the roadmap, then we need to make that clear, because again, that is setting the perspective, that's setting the scale of the business. In that same example, if like maybe you have in the back of your head, like, oh, it'd be nice to like, if this really works, we could expand it to multiple locations or multiple cities, but you're not really sure if that's what you want to do or if that's going to work out that way, then I would say maybe don't include it in your business plan. Okay. Because that is what your lender is kind of measuring you on, right? That's going to be their expectation of you. So if really what matters to you is to have one successful location, and even if you only ever had one successful location, this business still makes sense, start with that as the focus of your business plan, the focus of your projections. If what is successful and what makes it all worth it to you is that you do end up having 3 locations, then your business plan needs to involve that and be very clear, specific around that. Mission statement is what it is. It's a nice thing to include. It's really not that big of a thing that's really going to set you apart that much. So don't spin your wheels on that a whole lot. Keys to success, again, is a nice thing to include if they actually are keys to success. It's even better if they're measurable, and even better if they are controllable, right? So I don't like when people include a key to success that is outside of their control. If that's like, there's supposed to be 50,000 new people in the area, and so that's going to be lots of construction projects. So that should mean a lot of new tools need to be rented. Like that, there's so many things that have to go right for that to make sense that we don't really want to have to depend on that. So be specific about what you're including there. One thing that's not included in this executive summary that I like to really include in the business plan is like a financial summary. Again, we're setting the scale, the context for the business. So, you could include things like how much startup costs will there be? How much funding are you going to need? How much of a loan are you seeking? Just a few of those points are nice to include, because again, that's going to reframe for your lender like, oh, okay, so now I have an understanding of how big we're talking, how small we're talking, rather than if projections are usually towards the end of the business plan. So if you wait until then to say that for the first time, honestly, most lenders will probably skip to the projections and read that first and then come back maybe. So just make it easier. Put it in the executive summary. Okay, moving on to the company description. This is kind of just an extension of the executive summary. As I mentioned here, you've got the little blurb about the company interview on the executive summary. And now here's your chance to go into a little bit more greater detail. Talk about the founder story, company history, an introduction to who's involved, the ownership. We will go into greater detail on who the owners are later, but doesn't hurt, especially if they have very relevant experience. Mention them now. I realize we're not to the first key point yet. When we get to them, we will go through them quickly. Legal structure, it is what it is. Unique selling proposition. Only include a unique selling proposition if you actually have something that's going to set you apart. If you're just going to say, we're going to have the best customer support. Well, everybody thinks that they have the best customer support or customer service. So that's a little generic, right? But if you're going to be offering a new piece of equipment that nobody else is offering, or, something that no one's really doing in the area yet, or an emerging opportunity, then add that in. That's a great thing, or maybe you deliver the equipment or the thing directly to people. That's the type of thing that should be your unique selling proposition. Something that actually sets you apart. And then your target market kind of speaks for itself, right? Try to go into as great detail as possible. Don't say your target market is everybody. That's not real life, right? Because that's not really your addressable market. If you can really hone in on a specific group, whether that's an age range, gender, income level, location, interests, hobbies, that kind of stuff, and you can actually put a number to that size of that group of people, that's where you're going to win in that target market section. Okay, moving along to market analysis, and this will have our first key point in it. So we finally made it, and then we're going to go through them pretty quickly. So the market analysis is going to be more, we want to basically demonstrate to the reader, to the lender, that there is room in the market for what we're going to offer, And if there's not, if it's hyper competitive or nobody's doing it yet or whatever, we need to explain to them what we're going to do or what opportunity we see to steal some of that market share or disrupt, the competitors or what have you. So that's what we're going to talk about. Your lender, and we can talk about this more later too. They may or may not be local, right? If it's maybe your hometown bank or something like that, they should probably have an awareness of the area, the community, competitors and that kind of stuff. And so they're probably aware somewhat of the scope of your opportunity, but they may not be. So it's your job to demonstrate that reliably to them. So avoid the Shark Tank thing of saying the equipment rental business was a $3 trillion business last year, unless you're going to continue to slice that down to where you're actually going to talk about your addressable market. So the market analysis is more about you are analyzing the market where you will actually have customers, where you could actually get customers from. So when we're talking industry overview, we're not talking about the macro picture of the equipment rental industry. We're talking about your industry in your specific addressable market. Competitor analysis, very important part of the business plan. And I would say you should be aware of, now again, this is going to depend on what type of equipment rental service you're doing, how large is the area which you could reasonably serve. Is that going to be people within a 15-mile radius? Is that going to be people within a 50-mile radius? How big is the equipment? Is it hard to, if you have to deliver it, like transport it, like it's going to change based upon your type of equipment. Is it small enough stuff where you can have a storefront and people can come pick it up and throw it in their car? Is it big enough that you're going to have a trailer and you're going to have to go drop it off on a property, right? So it's going to depend probably on who your competition is. So whatever that is that makes sense for you, you should know every one of your competitors within, I don't want to just say a specific radius, because I would say every competitor within the range of which you would expect to get a customer from, right? So if that's within a 30-minute drive of you, within the same city, you can put the size on that, but you should know of all of them. And then I would include in your business plan the 3 to 5 most direct and most relevant competitors to you. The most relevant competitors are probably going to be who's the closest physically, like proximity wise, and who is offering most closely to the same thing that you are. So if that's the exact same equipment, or they have overlap in the equipment, the type of person, if you're serving the type of person, like if you're serving DIY home renovators, or if one of you is serving DIY home renovators and the other one's working more with construction companies. So, you should list the 3 to 5 most closest competitors to you, and then try to do some research. List what they do really well and maybe what they don't do so well, or they don't do, and that's an opportunity for you. So if someone's been around for a long time, you can talk about that, right? They have staying power, they have a loyal customer base, a lot of people know who they are, but maybe they've gotten a little too relaxed on their customer service and they've got a lot of negative reviews on Google, right? And you could talk about that. So don't take the shortcut easy way out on competitor analysis. You should actually do your homework to understand who the competitors are. Sometimes I'll write business plans for people who say, I don't have any competitors, because they think what they're doing is so novel, but really is everyone has a competitor, right? So you just need to make sure you're aware of who's on the playing field, and then put them in your business plan, because it looks nice and it's a good research to do that. I wouldn't be too worried about indirect competitors, but you can talk about that. Again, that's going to depend on what type of thing you're renting out. But yeah, I would focus more on just like the 3 to 5 most close competitors to you. Target market analysis is just a chance to go in greater detail on what you talked about up here in your target market, so you can talk about them further detail here. And then market opportunities. So I had said earlier, you don't want your keys to success to be based on things you can't control. Market opportunities can be things that are outside of your control. So these are things that are should be if these go to plan, or if these things pan out, that would be huge for us. Talk about those things. Is that a new company coming to town? Is that a new manufacturer coming to town? Is that a massive new construction project that you have a chance to help rent things to? Is that a boom in people doing at-home renovations? Whatever you want to talk about in there, that's a good chance to talk about that. And finally, key point number 1, I promise we'll go fast after this, and that is market analysis. So I should rewind just a second. Everything we've talked about in here so far is kind of like a minimum expectation. You should include your own version of the things that you've already seen in here. So that's why this template exists. It tells you what should be included in your business plan. These key points are going to be things that are kind of going above and beyond how to upgrade your business plan. So key point number 1, the market analysis. If you can provide some specific example or of local research to demonstrate that there's actually room in the market for the business, that kind of helps level up this whole section and makes the opportunity feel more believable. There's some examples in here, right? You could do surveys, you could contact people, you could pay someone for a market research study. Like you could do a lot of these different things. One quick example I like to show people just to demonstrate is this example number 3, perform keyword research to find search trends in your target market. So I'm going to go to this tool called Google AdWords. You can create a free account. They've got this cool tool in here called a keyword planner. And basically what this allows us to do is simulate how often are people searching for specific search phrases in specific locations. And so I've got my location set to Indianapolis, Indiana. That's where I want to see the search results. And then I've got these search phrases that I'm curious, how often are the people searching for those things? And we're going to get some interesting information out of this. One, it's going to provide other related keyword ideas for you, right? So you can see specific types of rental equipment and whatnot people might be looking for. We can see on average per month how often are those being searched for. We can see some seasonality. And the most important thing that this tool shows you is this year-over-year change. So this we can see is each year, is there a growth in demand for the things that we're going to offer? Now, if we just see negative percentages, that might be an indication to you that, times are getting tougher, people may not be spending as much or renting on things, whatever. It could be a number of different reasons, but it's an indication to you that competition is probably tougher because there's less people searching for these things. On the other hand, if you see some increases in these percentages, like skid steer loader rental is up almost 100%, scaffolding rental is up, scissor lift rental is up, backhoe rental is up. So there's still positive movement in this. And so that's my example, or that's what I'm trying to say is look for your specific type of thing. Like if someone is to search for something on Google that you would want to show up for, your piece of equipment in your specific location, see what the trend is and the demand. Now, this is not an indication of supply. Supply is going to be your competitor research. How many people are offering the thing that you're offering in your target location? And then this is going to be demand. Is there a growth in people searching for the thing that you have to offer? And then you marry those two together, and that looks really good in your business plan. So you can take screenshots of this, add this into your business plan, talk about that research, and that looks really nice. It upgrades that section. Okay, moving on to marketing and sales strategy. This is probably the section of the business plan we're going to talk about the least, and that's because, again, these are all minimum expectations. Like, you're going to talk about what you're selling. You're going to talk about how much you're selling it for. You're going to talk about if you have some sort of specific sales strategy that, will allow you to be successful. You're going to talk about distribution channels. You're going to talk about advertising. You're going to talk about you have a website. You're going to talk about you're on social media. So there's nothing groundbreaking about this section, but it does require a lot of minimum, work from you, right? You can't just leave this section blank. You need to have a basis on that. But what I'm going to get to is this key point number 2. And that's just like the first section, or the market analysis section, where you're going to talk about all of the things that we've included in this business plan, but then to upgrade it, we're going to try to do the same thing. Can we demonstrate an example of how we're actually going to acquire customers? Because it's one thing to say like, well, these are the things that we're going to do to attract customers. It makes it even better if you can demonstrate what's called traction. And that is tangible proof that when you open this business, there's a high degree of likelihood that people are actually going to show up and that you're going to use it. And so depending upon your type of equipment rental business, examples of traction are going to be a little bit different, maybe a little bit more difficult. Some industries, it's easier to do this than others. My favorite version or example of traction or customer acquisition demonstration is going to be people who start, basically if you can start as a side gig, before you ever launch the business, that's one of the best ways to prove the concept that you can. So the best forms of traction are: one, pre-launch revenue. You're actually making money before you officially launch the business. The second best version is names on a list. So maybe if it's a thing that you can't pre-sell or do on the side, you do the hustle work to find out if people would actually be interested in the thing that you're going to open. And if you can get people to sign up and say, yes, I would like to find out more about this when it launches, that's a great example. You can put in your business plan and say, we've got 1,700 people that have signed up to say they'd be interested in our kayak rental business in the Indianapolis area. That's huge, right? Because that proves a few things. One, you found customers. And two, you've got a lot of hustle, a lot of grit. That's a really key intangible that lenders like to see about entrepreneurs and about startups. And so if you're going to be renting out a thing that you happen to have a few of them, and maybe you haven't gotten a business loan yet to get the rest of the inventory you want, but let's say you've got 3 pieces of the type of equipment that you hope to rent out eventually, start doing that on the side. Start doing that in Craigslist ads, or, your friends and family, your neighborhood. If you can start to get some transaction records, improve that concept a little bit. It might seem silly to you, but any amount helps. You can say made $7,500 in 6 months by renting out my extra kayaks in my community or something like that. That's a really prime example of traction. So I promise you that actually means something. That's key point number 2. Moving on to operations and management. So here you're going to get into more of like the logistics of the business. Like, how is it actually going to operate? Again, minimum expectations here. This is going to be a section where I can't really tell you everything to put in here because it's going to come down to your expertise in the business. So this is where you're going to have to do some research and be like, how do you actually run the type of business that you're trying to start? So you're going to talk about inventory management and tracking and maintenance and repair if it's equipment that you need to keep maintained. You've got scheduling, you've got safety protocols, customer service. So this section is going to change wildly depending upon your type of equipment. Are you going to have experts on the team to maintenance those types of things? So just some different things around that. But I will talk about key point number 3, because this is the section to flex this muscle. And that is going to be demonstrating that you have relevant industry experience, either you personally or your team surrounding you. So we really want to ensure that the lender is confident that you know what you're doing, you know what you're getting yourself into. So an example from when I was a lender, I had someone who was a longtime marketing executive, and they decided they were sick of that and they wanted to open up a sandwich shop. And, they had money and they had a great credit score and all of this stuff, but we just weren't excited about the fact that they had never worked in that type of business or that type of environment before. Now, certainly they had some transferable skills. They knew how to sell, they knew how to market, probably brand to make it a nice place, but they never had experience working inside that shop, running that team, inventory, optimizations, all that kind of stuff. And so what you really need to make sure you highlight is what relevant and transferable skills and experience you are bringing to the table that make it make sense for this industry. And if you don't possess that solely, you need to supplement that, whether that's with a partner, like another owner, co-owner, or something like that, that fills the gaps that you don't have. If that's a key manager, a key employee, key mentors. So whoever you need to supplement around you to make sure that your lenders be like, okay, yeah, they've got it covered. They know what they're doing. It's a simple check mark that you want to get from your lender, but it's a big one, because if they have any concerns over that, it's going to be very difficult for you to probably get through that process. So you want to earn that credibility. So make sure you're not afraid to talk about the experience that you and your team are bringing to the table. Okay, moving on. And this is the big one, the financial projection section. So here you can see we've got a nice graph and breakdown of our startup costs. We've got, it might be a little zoomed out from this video, but this is like a 5-year little preview breakdown of the profit and loss. So we've got revenue, direct expenses, gross profit, net income. So some of the high level numbers there. We've got some rental specific KPIs or key performance indicators. So we've got number of units available, revenue per unit, expenses associated with those units, Got some key ratio data, like sales growth data. Here's a breakdown of our monthly operating expenses, or like our recurring overhead. And then we've got a 5-year income statement or profit and loss statement. So this is the pro forma projected 5-year income statement. Same thing for the cash flow statement, balance sheet. And then we've got some nice sales charts, break even analysis, monthly sales forecast. So this is usually the section that a lot of startups and business owners goes, like their eyes kind of roll over because they're like, oh my gosh, I don't really know what to do here. Fear not, all of those numbers were generated using this template. Now, I mentioned that was a free business plan template. We've got a lot of different free resources. These templates are not a free resource, but they are a very affordable resource. And so the reality is you have to have financial projections, especially if you're a startup, if you hope to get funding. And I would recommend you do financial projections, even if you aren't necessarily going to need funding, because it will make sure you dial in your numbers and ensure that you're going to be profitable if you do the plan that you set out to do. This template, we've got over 100 different industry specific templates. This one's our equipment rental financial projection template. So it works for any rental business. You're only editing, zoomed in. You're only editing these blue boxes on these blue tabs. So we're going to put in some starting assumptions. It's not a lot of information, I promise. It's pre-filled out, which is helpful, so you know where to put things and what to put in. So you're going to see what type of equipment you're going to put in. Again, we're only editing these blue boxes. See things like revenue per unit. So all these are calculations. You're not putting those numbers in there, so you don't need to get overwhelmed by those. Here's our monthly expenses. If we have any salaried employees, they're going to go in here, and then it's going to generate all of these financial statements for you. All those things we showed you in the business plan and more. These are what your lenders are going to need. That is linked in the description below. You can grab a copy if you'd like to. We've got a whole video guide on how to fill it out. It comes with free support. We'll provide a free review if you complete your projections. I promise it's totally worth it. You also have the option to hire our team to create the projections for you if you'd like. I'm not going to go into detail on that or pressure you into that at all. But if you don't have an interest in doing it yourself and you would like an expert to take care of it for you, we are happy to do that and we're standing by. Okay, so key point number 4 isn't just the fact that you have to have financial projections. You have to have financial projections, minimum requirement. Key point number 4 is that they need to be realistic and within industry expectations or industry norms. And the best way to do that is to benchmark your projections. And you might be wondering, well, if I don't even know how to create projections, how am I supposed to benchmark for projections? And that's a great idea. Let's assume you use this template to create your projections, or maybe we've created your projections for you, which if we created your projections for you, we would do the benchmarking for you or with you. But a great way to do this, let's say you got the template and you filled this out yourself. We have all of these great numbers in here that we can just look up averages for. So some options, like let's look up what net income, right? A profit margin would be. So you can either go to good old Google, search for, something like what's a typical profit margin for a tool equipment company or a kayak rental company, or, you name it. You can also use a tool like ChatGPT, give it a bunch of numbers from it all at once. So let's see, what do we talk about? Net profit margin, average net profit margin, 5 to 15%. So if I go back to my projections, let's see, are we very far off? Net income, 11%, 4%, 4%, up to 5%. Profit margin right here, same thing. So we're right on the money, right? We're within an industry norm. So you could do that with any number in your projections. You can do the same thing with your pricing. Average price per month, right? You want to make sure your prices are in range with your competitors in the area. Are you charging a premium because you're offering some sort of extra benefit? Are you trying to, be a little cheaper? Are you trying to be right on line with your competitors? If you don't have any direct competitors, you got to use an industry, like a national average. The whole point of benchmarking that is because you want your first impression to your lenders to be a good one. If your numbers seem way off or confusing or totally not based in reality, it's hard to recover from that, because you can't just say like, hold on 1 second, I'll be right back, and then all your numbers are different. You really want to make sure your lender knows that you spent time researching and dialing in those numbers. So that's how I would benchmark your projections. Again, if you'd like help doing that, reach out to us at support@ProjectionHub.com. Happy to help you answer any questions about the projections. That is our specialty. We've done that very thing for more than 50,000 small businesses and startups. We could help you too. All right, and that brings us to the end of the business plan, but we've got one more key point. And this one is more of advice than it is something to put in your business plan. And that is, be prepared to demonstrate skin in the game. Some people don't know what that phrase means. Some people do. I'll use an example of if you're going to buy a house, right? If you go to, let's say you're going to buy a $100,000 house. I know those don't exist anymore, but just for simplicity's sake. And you go to the bank, and let's say that your credit score looks okay, and they would like to give you a loan. They're not going to give you $100,000 to go buy a house if the house costs $100,000. They might give you $90,000 for the house, right? So you're going to have to put in money. You're going to have to share in that risk a little bit, a down payment, a down deposit. So not only are you contributing some skin in the game, so you have some risk, right? If you don't pay back that loan, and sorry, I should say you put in the $10,000, but also, if the bank is going to take the house and that's going to be their collateral on the loan. So now if you fail to pay back your loan, you're going to lose your $10,000 that you put in as a deposit, and you're going to lose the house because the bank is going to take that and they're going to sell it and try to make back their losses. And so same thing goes for a business loan, right? If you need $100,000 to get your equipment rental business started, they're going to expect an owner investment. So you're going to have to contribute some. So probably 10%, maybe 20%, probably more like 10%. So $10,000 in our example. They're also going to need collateral on the loan. The equipment will serve as some collateral. If there's a collateral shortfall, they might ask for personal assets. So just be prepared for that conversation. That could be a second mortgage on a house. That could be a free and clear car. When I was a lender or a loan officer, all the time I would have people say that they wanted to keep the loan separate. They wanted to be the business name and not the personal name, which would be awesome if it worked that way. It does not work that way. You will be signing on the line personally for the loan. If the business fails to pay back the loan, you will be personally responsible for that loan. And so the only reason I say all these things is not to scare you. It's just to be prepared and have good expectations when you're talking to the lender. They're not trying to take you for everything that you're worth. They're just trying to mitigate their risks so that if the loan fails, because startups can be risky, that their losses are likely to be covered. That's what they're trying to do. Other ways to strengthen your application would be lining up a cosigner. I would encourage you to do that whether they ask you for one or not. So go ask someone that you think would be a good cosigner, so has good outside income, strong credit score, and ask if needed, would they be willing to cosign on a loan with you? Could be a parent, could be a sibling, could be a friend. And if they agree, keep that in your back pocket. You don't have to tell your lender that, but if it comes to the point where your lender says, hey, we would really feel more comfortable if you had a cosigner on the loan with you, you can say, great, I've already asked somebody, let me confirm with them, and then things can keep moving. Now, that's just a quick fifth point. And that is just being prepared for that conversation. You don't have to put any of that in your business plan, but you should do that research. You should do that preparation and just be prepared for that as you're going into it. And so there you have it. That is the how to write an equipment rental business plan. Grab your free copy of this business plan template. Start writing your own template. If you have questions about your business plan, if you have questions about your projections, if you have questions about an SBA loan, where to start, who to apply with, please don't hesitate to reach out at support@ProjectionHub.com. We've got tons of free resources. We've got tons of resources that aren't necessarily free, but will be very helpful to you. And we're always here to answer questions. So again, my name is Kyle, and I hope you enjoyed this video. Give it a thumbs up if it was helpful to you, and consider subscribing to the channel so you can see all of our other helpful content. And we will see you in the next video. Oh, and I should mention, there is a promo code down. If you go down in the description below, you can get 15% off that financial projection template, just for saying thanks for watching the video, and we'll see you in the next one. Thanks.